Palantir has skyrocketed 620% since December 2022. That's less than 2 years. And the question on everyone's mind, did I miss out? Is it too late to buy Palantir? Well, it depends. If you bought Palantir at the all-time high on January 27th, 2021 at $45 per share and held on, you're still down on your investment, even though the fundamentals have significantly improved since then. You also would have had to stomach a fall from $45 all the way down to $6. Very reminiscent of Amazon going from $113 a share down to $6 back in 2001. And in some cases, a business is a better purchase at a higher price because there's more clarity on the management and the path to profitability. So let's analyze Palantir as a business and see if that's actually the case for Palantir. So before you buy any company, there are two things you have to look at: the story and the numbers. Merging them together is how you get the best investments. Because, like Buffett and Munger always say, some of the best companies to invest in on general metrics will look expensive from a normal valuation perspective. Guys, this is Palantir's customer growth. This is not year to year. This is quarter to quarter, starting at the beginning of 2022. 277, 304, 337, 367, 391, 421, 453, 497. And the best part about Palantir is they've done a great job diversifying their customer base. They started in 2003 to help the government with their war on terrorism. And since then, they've realized, listen, we need to get more contracts with more commercial use. That way we diversify our cash flow and aren't reliant purely on hoping there are wars and hoping there are issues in the government that they have to tackle. Now, let's look at Palantir's most recent quarterly report. Palantir reports revenue growth of 27% year over year. But here's the best part. U.S. commercial revenue grew 55% year over year. That's incredible. The number of customers grew 83%. So what that tells me is they're getting more customers at a lower price. Now, you might sit there and say, that's not good. Well, not necessarily. It's about diversifying. The bigger and bigger you get, in order to grow, you have to take less and less revenue on. That's okay, in my opinion. And on top of that, U.S. government revenue still grew 24% year over year. That's still solid growth for their biggest metric. Commercial revenue, 33% year over year. And total government revenue, not just US, grew 23% year over year, and they closed 27 deals over $10 million each. Now, guys, the other benefit is Palantir is big on the AI space, and AI has a lot of great growth potential. Here is the global artificial intelligence market size accounted for $638 billion US dollars in 2024, expected to go to $3.7 trillion. A compounded annual growth rate of 19% in 2034. Now, these are estimations, but guys, that is a huge growth potential. Now, I don't know whether it's going to happen or not, but I will tell you, if you told me it was higher than this in 2034, I'd believe you. Now, guys, this is their breakdown of revenue by year and segment, government versus commercial. Now, as of late, government's been a lot higher, but when it first started, government was $255 million. Commercial was $340 million back in 2018. Look how much it's grown. Commercial has grown about 3x since 2018, but government's grown almost 5x since 2018. So I'm looking at this saying, hey, this is getting pretty good here. There's getting some more diversity here in their revenue. Let's get them out there. And guys, this is where I'm now going to show you some of the financial metrics that are important. And the biggest one I like, look at their current gross margin, 81%. That means those $10 million contracts they're signing, $8.1 million roughly goes to basically pay their overhead and their taxes. 81% gross margin. Can I compare that to another big software business? Let's go look at Microsoft. Microsoft's gross margin currently is 69%. Palantir has 12% more margin on every dollar they sell versus Microsoft. That's a huge, huge difference that can really add to the bottom line and really create more and more growth in their profit and free cash flow. Now, the interesting part is, you look at the stock hitting an all-time high of $45 on January 27th, 2021, and where the stock is just now maybe going to get an all-time high, but yet you've seen how much revenue and profit increase in that time. Why? Guys, valuation. Here are the things that kind of concern me about the valuation metrics for Palantir. First off, price to sales ratio. It's over 40 right now. Now, NVIDIA is pretty high, but NVIDIA has a much faster growth rate than Palantir. So you might sit there and say, well, wait, Palantir is software, NVIDIA is hardware. There's different, yeah, but their gross margin is actually pretty similar. It's like 75% for NVIDIA, 81% for Palantir. Yet Palantir is selling for the higher multiple of sales and the higher free cash flow, 144 times free cash flow. It's a big number, guys. Big number. But one of the benefits of Palantir, $100 billion market cap, enterprise value, on any metric, basically, my version or traditional is about the same. They have a great balance sheet. And another good thing that people don't pay attention to, they've really done a good job of decreasing the amount of stock-based compensation. That means that as they're having this free cash flow, a lot of people will subtract out the stock-based compensation, kind of saying, listen, you're giving out all these shares to people in your employee. It's diluting our owners. It's got to come from somewhere. So how much potential is there in Palantir? Let's go see what analysts are saying about the company. It's actually surprising. Not that much growth on earnings per share. 36 cents, 44, 53, 58, and 71 cents. But Palantir is not about earnings, not about net income. It's about that free cash flow. Let me show you guys what I mean. Here is the income statement annually for Palantir. Negative 580 million, negative 580, negative a billion, negative 500, negative 373. Finally, last year showed a net income of 210. And in the last 12 months, 404 million. But let's go look at their free cash flow, which is a much more important metric in my opinion. Negative 50 versus negative 580, negative 180 versus negative 580, negative 300. They were cash flow positive in 2021. 300 million, 183, 700 million, and still 700 million in the last 12 months. So free cash flow is significantly higher than its net income. And at the end of the day, that's how you pay your bills, is through free cash flow. So the interesting part about Palantir is their free cash flow is getting better and has been better for a while. And that's what I love about it. But remember, the question every astute investor out there has to have is there a price that's too high to pay for a good thing? And the answer is always yes. So is that the case with Palantir? Well, we're going to get into that in 2 seconds on our stock analyzer tool. And the reason we use the stock analyzer tool is, guys, we don't know the future. But I have 3 assumptions I make on Stock Analyzer tool because my goal is to make a low, middle, and high assumption on a lot of different ranges. First and foremost is revenue growth. You have to use these tools to at some point build a model to say, okay, if this happens, what am I willing to pay? If this happens, what am I willing to pay? Some of the people in our community have had Palantir and held on to it, not only bought at the lows, but held on to it as it fell. And I respect that very much. Just like you may have felt yourself. There has been uncertainty of Palantir being a good value, but using the tools inside the software and have our conversations inside the community, our users were able to ignore the price movements and determine a value for Palantir. The theme inside of our community is that valuation matters, and ultimately, price is what you pay and value is what you get. I understand everyone is always on the lookout for the next Microsoft, the next Google, the next NVIDIA. But back in 2012, I didn't have a community, and I made mistakes like not letting Microsoft run after I bought it. And just like everybody out there, I bought a company in 2000 that went to zero because I was buying into the tech hype. Global Crossing, go look it up. I believe the CEO was the fastest ever billionaire in 11 months. From start to billionaire was 11 months of time. And sometimes solid growth stocks like Palantir might be right in front of you, but you need to understand that price and value in the long run are tied to the hip. As value goes up, price will go along with it. But if you overpay, it's a lot harder for the value to jump up versus price to fall down. Now, we don't know the future, what's going to happen, but investing can be a lonely road. So if you saw a stock go from 45 to 6, but the fundamentals are getting better, even with the fundamentals getting better, it's hard to sit there and say that's okay. When the stock was at 45 and other YouTubers were saying it was a $500 stock, I sat there and said, listen, I don't get this. I'm interested around $5. And guess what? It went to $5.90 or something like that. And I never pulled the trigger because it didn't hit my buy price. I was probably being too strict. And in all fairness, I was probably being a little biased against Palantir. Why? Not going to lie to you. The way the company's CEO looks and acts. But he talks about these short sellers, Stone and Coke, and all these other things, and it kind of gives me an icky feeling. That's what makes the Everything Money community so incredible. Everyone in there is dedicated to achieving financial success together. So I invite you, come join our community. But we're currently working on some new additions and changes to the software. But the good news is the changes haven't been put live yet. So if you join now, you'll be grandfathered in for life with all the features we created and all of these tools for retirement, stock analysis, and real estate. But even better, you're going to be locked into your pricing tier forever. Just as a reminder, we have a limited number of daily spots in the community and the software. So click on the link in the description below. Go to everythingmoney.com to get access to our community and software before we make these changes. I assure you, it'll be one of the best decisions you ever make. So now let's go check out the stock analyzer tool to determine the right price for us to pay for Palantir. Now I'm going to pull up some previous Palantir analysis, and I'm going to show you guys what I thought put in for a 10-year analysis. My low, middle, and high revenue growth rates. I put in 8%, 16%, and 24%. Guys, 10 years at 24%, that's not easy to do. But I put on the high side because we're looking at 19% compounded annual growth rate potential for AI in general. So if Palantir can do a little bit better than that and take more of the market, that's very achievable right there. Okay? Profit margin. I put 15, 25, and 35%. Guys, for all I know, this could be low. Why? Because look at Microsoft. They do less gross margin, as we talked about, 12% less, and they have a higher profit margin than 20. They have about a 30 or 33% profit margin. So I could be conservative here. So I did that in the free cash flow. I put 20, 30, and 40%. I put a higher free cash flow margin, okay? Now, PE. Remember, this is the PE and price of free cash flow at the end of year 10, not today's, end of year 10. And if it's able to grow at these high rates, it should be a higher PE and price of free cash flow. I put in 15, 20, and 25% because I'm also sure by that point, the ROIC will be a lot higher. And finally, I did a 9% desired return. Now, obviously, for a company like this, for any company, you should probably have a higher than 9% return. But I put this in here to kind of give me my intrinsic value. What's the market return I would get if I wanted to pay this price? And from there, you need to put a margin of safety in. Or if you want, just put a higher desired return in here. You want 12%, put in 12%. You want 15, put in 15. The higher your return, the lower the price. So put these assumptions in, hit the analyze button, and here are my numbers. I have a low price of 350 to 6, high price of 40 to 44, middle price of 12 to 15. I have in my watch list currently at $15, not to buy it there, but to do more research to say, what am I willing to pay? Now, before you go, I want you to remember that in the short run, stocks are a voting machine, and the long run, they're a weighing machine. Palantir's weight is getting better and better, but if you overpay too much now, it'll cost you in the future. Can you still profit after a stock surges? Absolutely. You can still make money on stocks even after a significant rise if they're mispriced in the moment. It's not just about when you buy, but what you're buying. Do your research and focus on value over price to make smarter investments. So guys, if you want another video about Palantir, watch our next one about Palantir being the next NVIDIA. Thank you for your time.